So guys, a very good afternoon to all of you. We'll start off by discussing the homework question MIMS Corporation, which I gave last Thursday. Okay. So if you haven't done the question, no problem. I'm going to now draw the format and start from first so you can do it with me together. Right. So MIMS Corporation, I believe they had asked what are the things, these things, yeah. Profit and loss statement of changes in equity and cash flow statement. So first take out an Excel sheet. Okay. If you have done the homework, you can guys now check the answers with me. Okay. Okay. So guys, then let's start. Question number, what is this? 427. Okay. All right. 427 guys, we have MIMS Corporation. Right. Okay. Statement of profit and loss year ended 31st December 2005. Question number 427. Just give me a minute. Connect it. No. Hello? Yeah. Yeah, he said tomorrow he can arrange. Right. Okay. Yes. Yeah, we have to. Which one? Which one? TV also. Yeah. Okay. Right. Year ended, guys. 31st of December 2007. Okay. So guys, in this one we have revenue is there minus cost of sales, then we have gross profit, right? Administration expenses. No, before administration, guys, normally we have distribution expenses, right? Okay. Distribution expenses, right? After that one, guys, we have administration expenses, then we have operating profit. Okay, right? After operating profit, guys, we have investment income, then only we have finance cost. Okay, so after finance cost, guys, we have profit before tax, then taxation, and then we have profit for the year. But then you can also mark and keep for the safe side other comprehensive income, leave 2 lines, and then guys we have total comprehensive income, right? Then guys they are also asking statement of changes in equity. Okay, so draw that and also keep MIMS Corporation statement of changes in equity as at 31st December 2000. So statement of changes in equity, guys, you can keep share capital, okay, details. Then you can also keep share premium. Then we have general reserve. Okay. Then guys, we also have revaluation reserve. And then guys, we have retained earnings, right? These are the normal things that we have. Okay. And guys, remember in this past paper, they are also asking students cash flow statement. Now, cash flow statement means not the full cash flow statement, only they want cash flow from investing activity and financing activity. Let's draw that and also keep, guys, once and for all, then it will be easier now. Okay, so we have cash flow from investing activities, right? Leave around 4 to 5 lines. Then net cash flow from investing activities. Okay, and guys, again they have what? Cash flow from financing activities. Then guys, we have net cash flow from financing activities. Okay, all done, guys, right? So these are all the formats that they are asking. Now my personal advice will be this: first you focus on the profit and loss account and the SOCE. First finish that off completely. After that, you put your focus to the cash flow statement. If not, when we go to do both at the same time, it might be little confusing. So my advice, do the P&L, do the SOCE, finish it off. The rest of, after the question is completely ended, then you can start doing what? Your cash flow investing and financing activities. Right now, guys, let me start off by explaining to you, right, these adjustment what we have over here, right? First of all, guys, let's go to adjustment number 1. Okay, right now, guys, first thing, I am doing the question for 2005. Can you see that one? Okay. Now read paragraph number 1. So guys, I am on the assumption that you have done the homework, so I'll be a little bit faster. Okay. But again, if you don't understand, you can ask me. Right. Okay. Look at the first question, guys. MIM Corporation noted that there is an inventory count. There is an error in the inventory count in 2004. Now guys, first thing, this mistake happened when last year, right? But now only we understood this mistake. Now only we have, what you can say, guys, come across this mistake, but this mistake happened last year. Now last year, the closing inventory balance was overstated by 0.7 million. Okay, now guys, think. Last year, closing inventory, they have put more. Okay, so then from the last year closing inventory, then what should I do to correct this one, guys? Should I add or subtract? If they have put more, we have to subtract. Exactly, right? We have to subtract, guys. They have overstated. No, last year closing stock has been overstated. Then last year, right, if the closing stock is more, you have to subtract it. So what will happen, guys? Now we have to reduce closing stock by how much? 0.7 million we have to reduce. So guys, first understand, when the last year stock is deducted, okay, are you seeing what's happening here? Last year closing stock is more, so I should reduce last year closing stock. So first of all, there will be an impact on SOFP. Current assets has to be adjusted, but don't worry about that part because we are not doing the SOFP. Think, okay, now if I adjust my closing stock, where else will it affect in financial statements? One is current assets, that's correct. That forget, because it's done now, because we are no need to prepare SOFP. Now guys, when you when you adjust your closing stock, what else will get affected in accounting? Exactly, right? Cost of sales will get affected, and then gross profit also will get affected. Very good, guys. So let's start slowly. Cost of sale, right? Now think, now I am reducing my closing stock. Then what will happen to my cost of sale? My last year cost of sale should increase. When cost of sale is going up, what will happen to our profits, guys? Our profit will decrease. So therefore, first thing that what you should do, this is a error coming from the last year. No, think, in all our charts, where is the last year profits? In which column? Right, check carefully and see, guys. I am doing the profit and loss account and I am doing the SOCE. Last year profits, normally where will that be? In which column? Retained earnings. It will be inside retained earnings. Very good, right? So therefore, guys, first thing what I would like you all to do, can all guys go to your SOCE faster? Right, in SOCE, guys, can you leave one line and write prior period errors, right? And from your retained earnings, I would like you all to now reduce 700,000 and show, right? First mark it, guys, over here. 700,000 I want you all to reduce from last year retained earnings. Okay, right? Now if that is a little bit complex for you to understand, I'll go through it one more time, guys. First remember, last year closing stock is more, so I should remove from the closing stock now. Then current assets will get affected last year, but don't worry about that, we're not doing that today. So if closing stock goes wrong, cost of sale also, guys, what will happen? Will go wrong. Is that clear? Cost of sale also will go wrong. When last year cost of sale gets affected, now you do the adjustment, right? You're removing the closing stock now. When you reduce your stock, cost of sale will go up, right? When the last year cost of sale is going up, gross profit will go down. So if last year profit is going down, your retained earnings will get affected from last year. That's why from the retained earnings, I'm removing 700. Why? Because my gross profit is going to go down. That's the reason. But guys, not only that, think carefully and see. This is last year closing stock now, right? If this is last year closing stock, this year what it is? This year it will become the opening stock. Exactly. So therefore, guys, now I have to go to cost of sale. Guys, now think and see. Opening stock value is more. Why? Last year closing stock means this year it's opening stock now. Right, now think, opening stock is more. I should reduce. When I reduce from my opening stock, what will happen, guys, to my cost of sale? Cost of sale should go up or go down? right? Opening stock is going down. When opening stock goes down, what will happen, guys? Very good. Cost of sale also will go down. That also will go down. So therefore, guys, you have to adjust. Yes, go to cost of sale. Now, guys, start marking this one. 11,600 minus 700, right? So this is getting tested from which lesson? IAS 8, right? Accounting policies, estimates and error. Last year closing stock goes wrong means this year opening stock also wrong. Opening stock normally where do we mark? Cost of sale. Because opening stock is more, I am reducing. When you reduce your opening stock, guys, your cost of sale also will go down, right? That's the explanation. Right, anyone who is having doubts, you can send it over. I'm now going for the next adjustment. Okay, now guys, let's go for the next adjustment over there. Let's see what's happening. Right, adjustment number 2. The provision. Okay, provision means which provision are they talking? Let's see. This provision, guys, over here. Can you see, guys? This provision. Right. Provision relates to a court case in existence since December 2004. MIMS Corporation settled this case for 6 million and the full amount is credited to cash and it has been marked inside suspense account. Okay, now guys, look at this carefully. Last year there is a court case. As provision, I only kept aside 4.6 million. Now when you read the paragraph, how much we have to pay for this provision, guys? In total, how much we have to pay? 6 million we have to pay. So that means we have to now provide some more. How much we have to provide some more? What's the gap, guys? 1,400. No, 1,400. Another extra we have to provide. Guys, remember, when you provide a provision, it's an expense. So normally, which expenses we can mark? We can charge that to administration expenses. This is all what you have to do. That's it. We kept aside 4.6 million. Court is now telling to pay 6 million. So I'm at a loss of 1,400 now. That loss you go and charge it to where? Administration expenses. That's it. Adjustment is over. Okay. Though they are telling lot of things, I do understand there's lot of things there. But now guys, our focus is what? Profit and loss and SOC. It doesn't affect the SOC. For the profit and loss, I should only mark the loss. No, that's why I'm only marking that and I'm done. That's it. Right. Can you guys check and see first and second adjustment, guys? Are we all okay? Right. Here what happened one more time. Provision is 4.6. We had to pay 6. That means we are at a loss of 1,400. No, that's the loss for the current year. What did I do? That one I went and marked to administration expenses. That's it. Online students, are we all okay with the first and second adjustment? Please check and let me know, guys, quickly before I move to the third one. All good? No doubts? No? Right. If you have, tell me. Yeah. Right. Okay, guys, let's go for the next one. Number 3, income tax. Okay, guys, listen. When I do income tax, I have a equation and a T account. All good? Right. Now, guys, shall we quickly mark that one, guys, over there? Right. Where can we do? Shall we do it over here itself? Or shall we open a separate account? We'll open a separate account and do, right? We'll open a separate account, right? Now, guys, income tax. Okay. Right. Can you guys put down this working fast when it comes to income tax? Normally, I do tax this way. That's because we already kept aside 4,600 now. Last year expenses, we already marked 4,600. That means only the balance has to be charged as an expense. Okay, right. Guys, now put the heading now, tax. Guys, normally single entity questions, if it's tax, I do like this. Right. First, I have an equation. Right. Copy this equation down if you want. TB tax plus current year estimate okay, plus current year estimate, and then guys we have deferred tax movement. Okay, we have a deferred tax movement, right? Guys, to understand deferred tax movement, can you open a deferred tax account for me? Okay, to understand the deferred tax movement, can you guys open, right, a deferred tax account and see? Deferred tax. Yeah, 560 will come. Correct. Just give me a minute. The student who is unable to join the class. All good, guys. Shall we start then? Okay, let's start. Right. So, guys, remember, if it's tax, I have this equation. Why do I have this equation? Then I can go and mark my answer to the income statement. And I have a deferred tax account as well. Now, I'll tell you how to start this. Okay. First of all, guys, you should go to your trial balance. Okay. Now, when you start this method, first thing what you should do, you should go to your trial balance and see, is there something called tax here, guys? Can you see? Income tax. What's the answer? 140. First, find that. Normally, when you start, switch to your trial balance. In your trial balance, there will be two types of tax. One is income tax, okay? The other one is deferred tax. Can you see here, guys? There's another one, deferred tax. Right, now pay attention. Income tax is on what side of the trial balance? It's on the debit. Then we call it as under provision. Right, first go and copy this one, guys, over here. Right, TB tax, what was the answer? I believe the answer to be 140. Right, first mark this one, guys, over here. Right, 140 under provision. Very good, under provision. Good. Okay. Then, guys, in your trial balance, can you see there's another one thing over here? Deferred tax, 7,700. What is this? This is the deferred tax account opening balance. Copy this over here. Brought forward 7,700. Okay, done. Easy. Current year estimate. Guys, from where can we get the current year estimate? That they will tell in the paragraph, meaning additional information. Now read your additional information and see, guys, over here. What is the current tax estimate? Okay, right. Read this paragraph and see what's this year estimate. This year, the estimate is what, guys? A tax refund. Exactly. It's a refund of 1.2 million. Guys, you should understand a small thing. We will get refund. I said this during the homework also. We will normally get a refund if the question has a loss. So this question, when you do, it will become a loss. So we have a refund of 1.2 million. So, guys, refund, okay, you have to mark this and show it over here as a negative answer, minus 1,200. You have to copy it and show it as negative. Very good, Trifty, because of the loss. Right, guys, listen. Normally, tax expense, I mark it as positive. But today, this is not expense. No, this is a refund. That's why we are marking it as negative. And guys, listen carefully. If it's a normal tax, this answer, this current year estimate has to go to where? It has to be marked inside current liability. But today, because this is the refund, this is a current asset, right? I'm just covering the other areas also. It's not needed, but I'm just telling you, if it's a tax refund, this answer goes to current asset. If it's a tax expense, we go and mark this inside current liability. Right, now, guys, last part, deferred tax movement. How to get the deferred tax movement? Like this. Again, go back to your paragraph. Guys, in your paragraph, what they're saying? The deferred tax liability as at 31st of December 2005 is estimated to be 8.2 million. See, deferred tax on when? 31st. 31st means, guys, what date? Closing date. Very good. Mark that answer, guys, over there. How much is the answer? 8,200. Right, mark it over there, please. Right, carry it down, 8,200. Guys, now close this account. Can you guys find the answer for deferred tax movement? Okay, please close the account and find the answer for deferred tax movement. Correct, very good. That's the answer. So, guys, when you close the account, what's the answer we are getting? 500. Correct or wrong, guys? Because this side 8,200. This side also 8,200. 8,200 minus this. What will be the answer, guys? 500. Right. This is an increase. Put arrow and keep, guys, over there. This is an increase. Okay, guys, now this increase, now copy it over here as positive, right? That increase, copy it over there as positive. Right, guys, listen, additional knowledge. This 8,200 will become non-current liability. Okay, that 8,200 what we have, if you are preparing SOFP, it has to be marked inside non-current liability also. Right, now guys, can you take your calculator and see what's the answer, guys, over here? Right, now take your calculator and check and see what's going to be the answer for this part for tax. 500 plus 140 minus 1,200. Correct. Right, so when you do this, guys, what's the answer? Minus 560. Correct or wrong? That's the answer. Minus 560. Guys, now take this minus 560. Copy this now to your income statement as tax. Right, copy it, guys, over here as taxation. Right, what's the answer? Right, minus 500, not minus, copy it as positive 560. Okay, copy it as positive. You know, guys, why we are marking it as positive? Now, these are tax what? Refund. That's why we are marking it as positive. If it's an expense, we normally mark tax as minus, no? If it's an expense. But today, this is what? A refund. Refund is always positive. So this is how, guys, the tax adjustment is supposed to be done, right? Hope you all did it properly over there. Any doubts, you can ask me. I will explain. Right, now, guys, others. Let's go to this part, guys, over here. Adjustment number 4. Right, please read that one. Yeah, sure, Faizan. No problem, right? Okay. Right. So, guys, please check now. Adjustment number 4. Right. On 30th of September, MIMS Corporation made a 1-for-4 rights issue. The exercise price is 3.5. The proceeds were correctly recorded in cash account with a corresponding credit entry being made inside suspense account. Right, now, guys, what is this? A right issue. So if it's a right issue, if you want to find the answer, we have a formula. What's the formula? Right. Yes, very good, Rifki. Right. So then, guys, the formula will be like this. See, number of shares, okay, into ratio. First, we should multiply by n. What is n? Nominal value. Once again, another one time, number of shares multiply by the ratio. This time, multiply by P. What is P second time? Very good. Premium value. So, normally, guys, a rights issue, we charge a premium. So, therefore, you have to mark it separately. Nominal value separately, premium value separate. This is the equation. If it's rights issue, this is the equation. 1 multiply by nominal, 1 you have to multiply by premium. Right, now, guys, let me teach you how to start. Number of shares. Go to the previous page. Right, guys, look at this. Equity share is $1. We have 60,000 shares. $60,000. One share is $1 means how many shares we have? 60,000. First mark it, guys. And also, guys, you have to be careful. Make sure this is the opening balance. You have to always make sure it's the opening balance. Right. So if it's opening balance, now, guys, start marking on here. Right. Number of shares 60,000. Number of shares 60,000. Done. Right. Multiply by the ratio. Guys, what's the ratio that we have here? 1/4. Okay. Multiply 1/4. Guys, also listen, one more small important thing. It's needed for the next part. Guys, 60,000 put into 1/4 and see what will be the answer. Very good, Rifki, right? 60,000 multiplied by 1/4 and see what will be the answer. 15,000. That means, I want you to understand carefully, it's needed for the last part. 15,000 shares we have given as rights. Do you understand? 60,000 shares, if you give 1/4, 15,000 is coming now. 15,000 shares we gave at discount. It's needed for the last part of the question. Right, let's continue. Nominal value, guys, nominal value is 1. From where did I get 1? Here, this one. Can you see nominal value? This is the nominal value. Now guys, what is premium value? Premium value is anything that you are charging extra. Look at the question. See, we are charging 3.5. Guys, 3.5 is selling price, no? Nominal value is $1. That means how much we are charging extra? 2.5 we are charging extra. That is your premium answer. Okay, guys, now multiply and take these answers quickly. Guys, remember, take the selling price or the market price, remove the nominal value. The difference is what we call premium value. Okay, now guys, can you use your calculator, multiply these two and take. Okay, so guys, first one's answer is 15,000. Guys, second one's answer is how much? 37,500. These are the two answers. Okay, these are the two answers. All good. Shall we mark, guys, now? Okay, now guys, can all of you now go to this part, guys, over here, your statement of changes in equity. So normally, guys, issuing shares, we have to mark here, statement of changes in equity. Okay, now guys, let's start. Go to statement of changes in equity. Right there, guys, rights issue. Okay, rights issue. Right, guys, 15,000 is what value? Nominal. Nominal should always go to very good share capital. Done. 37,500 is what value, guys? Premium. That has to always go inside share premium. Done. Okay, guys, now listen. I'll tell you a small thing. After this paragraph, our suspense account is cleared. Okay. After this paragraph, our suspense account is cleared. You know why I say suspense account is cleared? Now look at this. Right, now here they are telling the corresponding credit entry has been made inside suspense account. That means first thing, we are issuing shares, no? When you're issuing share capital and share premium should be credit. But these people have done, they have credited the suspense account. Guys, add these two and see what will be the answer faster. Add these two and see what will be the answer. 15,000 and 37,500. When you add, guys, what will be the answer? 52,500. That's the answer. Okay, so they have gone and credited that to suspense. Okay, and then, guys, can you remember another one small thing they did? Here, look at second paragraph. 6 million debited to suspense account. So 52,500 they have credited. 6 million they have debited. That means what's the difference then? 46,500. That 46,500 only suspense account over here. Now you don't have to worry about that because I have now done all the adjustments. Okay, how did this suspense account, guys, come again? They credited 52,500. From where did the credit entry come? Share issues, right? And they debited 6,000. From where did the debit entry come? The provision. Now it's nullified because we have now cleared all the adjustments. So now I don't want you to worry about the suspense account hereafter. It's cleared. Okay, right. So guys, then that part is all explained. Right, guys, now let's go to the next big paragraph. What we have, guys, over there. Let's focus on that one. Right, check and let me know, guys, if you are having issues or doubts. Okay, I'll explain. Right, go for this part, guys, over here. The big paragraph. Okay, so what does it say? Right, MIM acquired an investment property on January. Okay, January, right? Okay, and decided to use the fair value model. Guys, January means at the start of the year. You understand? And decided to use the fair value model for investment property. Guys, fair value model only they are using, as the property is expected to have a 20-year useful life, depreciation was recorded. Depreciation we are marking inside administration expenses. Guys, under fair value model, investment property standard, do we charge depreciation? No, we don't charge depreciation. So what they have done is wrong. Now calculate the depreciation faster. What they have calculated under fair value model, guys, we don't charge depreciation. So what they done is wrong. So we have to remove that. Okay, calculate the depreciation quickly. Right, what will be the depreciation, guys? 20 million over 20 years. What should be the answer? 1000. Now that 1000 they have calculated. No, I should remove. From where should I remove? The paper says all depreciation and amortization is charged where? Administration expenses. Right, now guys, can all of you go to administration expenses? Right, mark and keep, guys, next to this one, minus 1000. Right, 1000 should go to administration expenses. Remove from that. Right, are we guys all okay with this? Right, let's, but where to do? Continue. Okay, now guys, listen, if it's fair value model, we should not charge depreciation. Then what should we do? Take the starting value first. Then at the end, what should we do? We should again take the fair value at the end. Guys, go through the paragraph. What's the fair value at the end? 22 million fair value at the end. What's the increase? 2 million. Guys, fair value increase, do we take it to OCI? No. Revaluation increase only, you should take it to OCI. If it's the fair value increase under investment property standard, the increase has to be taken to investment income, other income. Go and guys, mark it over there inside other income, 2000. Very good, guys. It has to go to P&L. Guys, 20 million property became 22 million, not 2 million increase. This is not revaluation surplus. Why? It's coming under what standard? IAS 40 fair value model. IAS 40 fair value model, what does it say? If the property goes up or the property goes down, where should we mark? Property going up, income, other income. Not other comprehensive income, other income. If the property is going down, expenses, not inside OCI. Okay, you have to mark it inside income and expenses. So that's it, guys. That's it when it comes to what you can say the question, what we did. That paragraph completely over. Nothing more to do than that. Okay, guys, now let's go for this one, guys, faster over here. Right, adjustment number 3. Let's go for this one. Adjustment number 6. The following expenses were related to brands. 1.3 million was paid in April to promote one of its own major brand. Guys, now look at this one. 1.3 million we are spending to promote one of its major brand. What do you think, guys? Can we take this as an intangible asset? No. First of all, guys, promotion. Promotion means what? What expenses? Advertising. No, guys, it's kind of an advertising expense. And guys, you have to understand, own brand means it's an internal asset. No, internal asset means we can't mark it as an asset. It's an expense. Guys, remember this paper says all depreciation and amortization are marked inside administration expenses. Because of that reason, can you guys go to administration expenses, add another 1300. It's an expense related to the brand name. Right, mark it, guys, over here. I actually would have marked that to distribution expense because it's promotion, but the paper says we have to mark it to administration. That's why I have taken it over there. All good, guys? Okay, guys, let's go for the next one now. Right, next one they are telling 2 million cash was paid on October to acquire a brand. Guys, remember, when you buy an intangible asset, it is always an intangible asset if you buy from outside, purchased once. One of its competitors, and it has a useful life of 5. Guys, now you have to be careful. On October, we bought a brand, useful life is 5 years. So what you should do now, calculate what amortization. So I want you to calculate amortization, but be careful. Question is finishing in December. This is going for October, right? Start calculating amortization, guys, over there. Yeah. Now, Daniel. No. I think no, not like that. Right. Now, when you look at adjustment number 5, under what standard is it going under? Right. Adjustment number 5, when you take, what is the accounting standard it's going under? Investment property. Okay. Investment property fair value model. Do we charge depreciation? No, they have charge. That's why I'm removing 1000 from administration expenses, because they said all their depreciation is charged to administration. They haven't charged. That's why I'm removing. Right. And under investment property, any changes in the fair value, we should take it to other income. No, that's why I have taken it to other income. Okay. That's why 2000 went inside other income as per fair value model. Yeah. Now this one, and yeah. That is because they are telling anything related to intangible asset, depreciation and amortization is charged to administration expenses. That's why we are marking it over there. That is IAS 38. Okay, right. Guys, now I wanted you all to, Basil is there, no, right? Okay, guys, now I wanted you all to now start calculating amortization, right? How to calculate amortization, guys? Take 2 million divided by 5 years, but guys, how many months? 3. Very good. Into 3 over 12. What is the answer, guys? We are getting then 100. 100. Right. Now, guys, what you do, that 100 you go and mark it inside where administration expenses, right? Mark it, guys, over there. 100 inside administration expenses. That's your amortization. Okay, done. Guys, now last part, then we're done with the big question. MIMS Corporation paid a dividend of 0.04 per share to all existing shareholders. Guys, now don't make a mistake. When I started the question, can you remember, I have 60,000 shares in the company. Okay. Guys, after I start the question, did I issue any more shares than that? Yes or no? Yes. From the rights issue, can you remember I said you 15,000 new shares were created. That means now in our company, total number of shares are 75,000. For that, now we are paying 0.04 dividend, right? Calculate and see, guys, over there. 0.04 dividend, how much will that be then? 3,000. That 3,000, guys, can you quickly make sure you have gone and marked it here inside retained earnings as dividends paid? Dividends paid. Right. What's the answer? Minus 3,000. That's it. So this is how, guys, the homework adjustments need to be completed, right? So shall you guys quickly take 5 minutes and finish off everything? Okay. Now all the adjustments are over. Now, guys, let's start marking the numbers now one by one faster. Okay. Start marking it, guys, with me together. Dividends are not removed from administration expenses. The dividends were never removed. Okay. Guys, they are telling, no, yeah. It is recorded in administration expenses, right? The dividends, guys, these people have marked to administration expenses. So I should remove from there minus 300 because accidentally they have marked it there. That's fine. Because they are telling, yeah, it should be removed. Yeah. Because there is no this one. I mean, I have actually marked a revaluation reserve and kept just in case. Okay. Guys, so let's start copying the remaining numbers now one by one. Okay, revenue. Copy the answer. What's the answer for revenue? I'll now, guys, erase all of these. Wait. Okay, let's copy. Revenue. What's the answer? 24,300. Done. Cost of sale, what's the answer? 11,000. I already copied. Administration, let's copy the answer, guys, over here. Right, how much? 10,900. Distribution cost, copied, guys, over here. 7,300. Income tax, done. Deferred tax, done. Provision, done. Retained earning. Guys, can you copy this one as over here? Brought forward for retained earning. Brought forward. How much is retained earning brought forward? 43,200. Okay. Equity share brought forward, copy. 60,000. Intangible asset, done. Completed. Investment property, done. Finance cost. Guys, copy the finance cost over here. Minus 1,400 to the income statement. Okay. Guys, investment income, copy this over here. Investment income, copy it over here, plus 500. Okay. Guys, I'll give you 5 minutes. Can you quickly take out your calculator and guys now total this up, guys, faster. First, I'll show you my answer. Okay. First, I'll show the income statement, will you? Okay. Right. Guys, can you quickly take a few minutes time and get me the answer for the gross profit faster? Right. I'll give you 2 to 3 minutes. Right. Please get me the answer for net profit. Right. Calculate profit after taxation. Yeah, it's a loss, no, guys, this time, right? It has to be a loss. Okay. Guys, let's see. Cost of sale. First of all, guys, can you check your answer for cost of sale quickly? Right. 11,600 minus 700. What's the answer, guys, for cost of sale? 10,900. Right, now, guys, get the answer for gross profit then. Right, 13,400. Distribution expenses, 7,300. Administration, guys, can you update and take what's the answer? 10,900 plus 300. No, minus 300. No. Right. Beta. Minus 3,000. No. Yeah. 1,400 minus 1,000 plus 1,300 plus 100 minus 3,000 plus 10,900. Guys, is it 9,700 by any chance? Administration expense, correct? No, 9,700. Okay. So, guys, now the operating profit will be 13,400 minus 7,300 minus 9,000. It becomes a loss, minus 3,600. Right, total income 2,500. Right, so therefore, guys, my profit before tax will now become, right, minus 3,600 plus 2,500 minus 1,400. 2,500, guys, will become profit before tax. No, not profit before tax. It's the loss before tax. Tax will become positive. And now profit after tax, guys, will be 1,940. It's technically loss before tax. Guys, remember in today's paper, we don't have revaluation. So I'll delete these two. Right. So therefore, guys, the last answer for the income statement will be 1940. This is your answer. Correct, guys. Good. Rifki and Sazri, right? Last answer is 1940. Okay. Guys, now what you should do, this 1940, you all should now take it to retained earnings as loss for the year. Right? You should take it there. Minus 1940. You should take it to that side. Right. So with that one, guys, now what we should do, we should, guys, quickly total up all these answers and take. Right now, guys, can you quickly total up and take your share capital and share premium faster? Right, so here, guys, it will become 75,000, share premium 37,500, and the retained earning answer, guys, over there. Let's check and see what's the answer. 43,200 minus 700 minus 3,000 minus 1940. Right, how much, guys? 37,560. Is that the answer for general reserve? So retained earnings. Yeah, no, correct. Good. Right, copy this down, guys, quickly, and then we'll focus on how to do the cash flow statement. Okay. No, Daniel, that increase is what increase? $2 million increase, no? Yeah, that increase is no OCI we normally use when there is a revaluation. Okay, Daniel, that 2 million increase is there, no? That's a fair value increase, no? Not a revaluation increase, no? Okay, because it's under investment property, no? Not under cost model. That's why we can't show it there. Yeah, TCI, if you want, you can write Amjad, there is no problem. Exactly. Only revaluation surplus only we should mark it and show there, not fair value increase. Right. Okay. Guys, now last one, let me now quickly teach you how to do the investing and the financing activity. Okay. Right. Right now, guys, first of all, I want you all to learn quickly what comes normally under investing and financing activities in cash flow statement. Right. First, let's do a quick recap on that. Right. Okay. Now, guys, first thing, when it comes to investing activity, right, these are things that we normally have, right? Usually, guys, we say under investing activity, right, anything related to non-current assets or intangible assets or getting some benefits out of these. These are what comes under investing activities. Okay. Now, when I say non-current asset, I am talking about buying non-current assets and selling non-current assets. It can be PPE, investment property, anything. Buy or sell, you should mark them. Intangible asset also, guys, same story. You buy intangible asset, you spend on intangible asset, you spend on development. Okay. All these we have to show as investing activity. Buying intangible assets, you know, buying brands, right? Investing in fixed deposits, right? Buying another company share, right? All these are investing activities. And also development. Benefits, guys, normally what are the benefits that we get from these two? From non-current asset benefit, rent received. Okay. From intangible asset, what are the benefits we get? Interest received. Okay. Then for an example, dividends received. Okay, now when you invest in another company share, you get dividends received. No, very good, guys. These are what we call, what we can say, investing activities. So guys, under investing activities, these are the maximum possible transactions that can come: buying or selling PPE or investment property, right? Intangible asset, buying brand name, fixed deposits, investing in company shares, or maybe selling all of them. Development cost, dividends received, interest received, right? And then guys, on the other hand, we also have, after dividends received and interest received, we also have what you can say, rent received. These are some of the transaction that comes under investing activity. Guys, next part, what comes under financing activities? Now, normally, guys, under financing activity, anything related to equity and debt. When I say equity and debt, right, we say issuing shares. It can be normal or rights issue, right? Then if you issue shares, you have to pay dividends. So dividends paid also comes under financing activity. Then what else comes under financing activity? Taking loans, debentures, or even settling them. That also comes under financing activity. When you take a loan, right? When you take a debenture, all of these comes under, guys, what you can say, financing activities. Then, yeah, very good. Redemption of shares. What is redemption of shares, guys? We are buying back shares. And also, guys, remember lease. Lease what? Installment, not the interest, huh? Not the interest. Lease installment. When you pay lease installment, that is also a part of our financing activities, right? So these are, guys, some of the examples will come. Uh, 1 minute. Receiving a government grant, no? Yeah, that also comes under financing activities because it's a loan, no? Right? It's a liability, no? Right? So that also will come over receipt of government grant. Right. Yeah, intangible asset, buying them means buying fixed deposits. I mean, not buying other company shares, buying brand names, investing in fixed deposits, and also what's the other one? In development. Development expenditure is also intangible asset. So anything related to intangible asset, you're buying them or investing on them or spending on them or even selling them. Everything will come under investing activities. No, not separable. It has to be buying and selling actually. Okay, buying and selling. Okay. Right. Now, guys, you have some kind of an understanding of what comes under these activities. Okay. Now, guys, let's start our adjustments. Right. Now, let's start the question. Let's finish off that last part. Okay. Right. Okay, guys, now go to the first paragraph. Start from the adjustments. Guys, now see, first adjustment, second adjustment, third adjustment. Is there anything related to the investing and financing activity? First adjustment is what? Inventory error. Second adjustment is what? Provision. Third adjustment is what? Tax. Is it anything related to investing or financing? Nothing, right? Actually, guys, this and this will never come in the cash flow. Third one, income tax. Income tax is what activity? Operating activity. So therefore, it does not have to come inside the cash flow statement at all. So I'm going to skip all of that. Right, guys, now let's go to the fourth paragraph. Okay, let's go to the fourth paragraph. What is the fourth paragraph about? Rights issue. Will rights issue come under cash flow statement? Yes or no? Yes. Which activity? Financing activity. When you issue shares, it's a financing activity. Now, guys, start writing under financing activity over there. Okay, let's start marking the answer now. Rights issue. Guys, what was the answer you all got for rights issue? Can you remember the answer was how much? 52,500. Huh? The answer was 52,500 for right issue. Okay, right. Then guys, fifth one. MIMS acquired an investment property for 20 million cash. Will this come under the cash flow statement? Yes. When you buy properties, guys, which activity? Very good. Investing activity, right? Start marking under investing activity, guys, over there. Right. Purchase of PPE or purchase of investment property. Better write it properly, yeah? Purchase of investment property. And what's the answer for that one? Minus 20 million. Done. Let's go for the next one now, guys. Fast. Let's go for the next one. Okay, what they're saying after that? The fair value of the property has been assessed. That is okay. That's it. Sixth one, guys. We are paying 1.3 million for brand name and 2 million we are paying for brand. Normally, guys, brands are what assets? Intangible assets. When you spend on them, that is also, guys, which activity? Investing activity. Very good. Start writing, guys, over here. Intangible assets. We are spending. What is the total spending that we are making over there? Sorry, not financing activities, guys. It has to come under investing activities, right? Intangible assets. Okay, right. What's the total that we are spending? Minus 3,300, right? Total spending is that. Okay, guys, last one, dividends paid. Does dividends paid come under the cash flow? Yes. Which activity? Financing activity, right? Mark that answer, guys. What we got? What was the answer, guys? We got for dividend. I remember it was 3,000, no? Yeah, 3,000 was the answer. Start writing, guys, over here. Dividends paid 3,000. Right? That's your answer. Guys, with that, the full 20 marker, now we have finished. Right? Can you guys quickly just total these up and get your answers? That's it. Total these up. Okay, no guys, so with that one, guys, the homework MIMS question is done. Shall we, guys, now quickly discuss the other homework question, guys? What I gave yesterday, I gave you all 10 questions, no, yesterday, 10 small questions, right? Let's discuss on that one, guys, quickly over there, right? Thing is, Basil, to explain that question, it took me 45 minutes, to be very honest, right? I started off at 3:15, right? And the adjustments will take time, so rushing through will not be a point, right? I mean, it won't come out properly. Let's, okay, if I'm being like very honest with you, right? So yeah, because there are around 7 kind of adjustments, so it will take a little bit of time. Okay, okay, right, guys, let's go for the yesterday's homework questions, guys. What we were doing over there, let's quickly run through that. We did what and what? Lease and I believe discontinued operations and those things. Okay, let's go to that question, guys, faster. Okay, guys, this question 271 to 275. Let's start that one. Right. So guys, this particular question covers 3 standards. What are the standards? IFRS 5. Standard name, non-current assets held for sale and discontinued operations. IAS 37. What is that one, guys? Provisions, contingent liability, contingent assets, and IAS 10. What is IAS 10, guys? Events after reporting date, right? So 3 different accounting standards, guys, has been tested over here. 1 minute, Amra. The investment income, no? Yeah, yes. Yeah, guys, I think I have missed one transaction from the previous question here. Thank you, right? I missed the transaction. Yes, in the trial balance, there was an investment income of 500. Now, can you remember? In the previous question, guys, what we did, right? That also, guys, should come to investing activity. I have forgotten that one. Okay. Now, here, guys, let me show you that one. Will you here? Now, see, under investment income, guys, we have 2 things over here. No, the 2000. What is the 2000? The fair value increase. That is non-cash. Here, guys, there is a 500 investment income. No, I actually forgot that, right? That also has to come inside our investing activity. Right, investment income, no, right? So investment income also should come under investing. So just make sure, guys, you mark that later. That is because in the trial balance, they are not telling in investment income receivable, no. So therefore, we need to assume that we have got the cash. That's why. Yeah, but there they have said investment income. But then, like how you said, it can be a non-cash item even, no? Yeah. Guys, little bit keep that 500, guys. I'll double check and see that 500, right? Because it's completely slipped my mind, but let's keep the 500. I'll check that, okay? Amra, let me check on that. Okay. Guys, now others, what we will do, let's go for this question, guys, over here, which is yesterday's one. Okay. Which 3 of the following criteria need to be satisfied in order to recognize an asset in accordance with IFRS 5 non-current assets held for sale? Asset is no longer in use. No, there is nothing like that in the standard. Asset is being actively marketed. Yes. Sale has been agreed. No, there is no condition that way. Plan to sell the asset is unlikely to be withdrawn. Yes, asset is to be sold within the next 12 months, right? So these are the conditions, guys, that needs to be met for it to be taken as IFRS 5 non-current assets held for sale. Okay. Next question, what they're asking, identify whether a change in operation in A and B would be a discontinued operation. Now, guys, first of all, let's check and see this part. Right, A part, it disposed all of its outlets in country A. It rebranded all of its outlets in country B to target tourism market. The previous target market in country B has been aimed at a business client. Okay, now guys, I'll tell you one small thing, right? Now, when you look at the answers, in the answers, they have said like this, okay? Only country A represents discontinued operation. That's what the marking scheme says, right? They are telling B, the B1 does not represent the discontinued operation. But guys, from in my point of view, I'll tell you one small thing. Now, what is a discontinued operation in the first place? That's where an operation in a different geographical region has been stopped. Okay. A definition of discontinued operation is in a different geographical area, if you stop your business, that's a discontinued operation. Or maybe a business who is a major contributor, exactly, a major line of the business has been stopped. That's also a discontinued operation. Now, though the marking scheme says the answer as A, guys, see, this one is country B, you know. Country B means what? A different geographical location. So, in my opinion, both of these should be considered as discontinued operation. Because one is in country A, one is in country B. So when you look at country B, guys, it's different geographical reason, no? Right? Which one? Yeah, so that means it's a completely different activity also, no? Right? When you take on the other hand over there, right? So I don't know. I'm just telling guys, in my opinion, it has to be both. Both has to be what you can say considered as discontinued operation, because here the current business is shut and then they are starting off a new one. Okay, so therefore, again, marking scheme says A, but I believe the answer has to be both A and B, guys, coming under discontinued operation. Okay, right. Wait, it rebranded all its outlets. The previous target market had been aimed at the client. Wait. Correct. Yeah. I made a mistake. They're not stopping, no? They are continuing, no? Yeah. Yeah, guys, that means the marking scheme is correct in that case, right? It has to be option A, right? I thought that these people are completely stopping the business. They are still continuing. No, yes. The student is correct over there. Guys, that means what marking scheme is said is correct. It has to be only option A, because B, they are not stopping. They are changing and they are continuing. So I misread the question. So it has to be option A, right? That's correct. Right. Then guys, let's go for the next one. What they have asked over there, 273. At what value should the plant be held on 31st of March 2003 in accordance with IFRS 5 non-current assets held for sale? Right, now guys, listen. Non-current assets held for sale, what is the formula or what's the theory behind it? Like this. We have to always go for the lower of carrying value or what? Fair value less cost to sell. Right, this is what the standard teaches, right? IFRS 5, guys, non-current assets held for sale. Check the carrying value, check the fair value, go for the lowest out of the two. Right, now look at this paragraph, guys, over here. What does it say? Right, this one. At a board meeting on 1st of January 2003, they decided to sell the plant, which had a carrying amount of 4 million on 1st of April 2002 with a remaining life of 20 years. Guys, now see, we are planning to put it as for sale on April 2002. I mean, we had it in April 2002. Okay. We are at a board meeting on January only. We have decided to sell. That means after how many months? Right? After 9 months. Exactly. So therefore, guys, after 9 months, we have to first check and see what is going to be what value? The carrying value. So first thing, guys, take 4 million. Divide by 20 years, that into 9 over 12, right? Check and see, guys, what's going to be the depreciation after 9 months in that case. Right, how much is the answer, guys? 150. No, 150 should be the answer. So now, guys, see, carrying value of the asset is 4,000 minus 150, 3,850. That's the carrying value. They gave the carrying value in April, but we decided to classify it as held for sale when? In January, 9 months later. So for 9 months, guys, you have to calculate another depreciation. Right, next one, guys, fair value. What's the fair value of this one? The plant is expected to sell for 3.9 million. So that's the fair value, right? Okay, 3,900. Now, guys, standard says what? We have to always go for the lowest out of these two. So therefore, guys, the answer will be 3,850. That's your answer. Okay, guys, next question. What is the provision related to closure? Exactly. From the day that you classify, for the next 3 months or until we sell it, we are not charging depreciation. Correct. Okay, guys, now next question. What provision should be recorded in relation to the office closure? Guys, quick recap. When you're closing down a division, only cost related to the closing down can be considered as provision, not continuing cost. Now, normally, guys, when you close down, there will be closing down cost and continuing the business cost. Continuing business cost should not be considered. Only closing cost must be considered. So, guys, now when I go to this question over here, let's see. A decision was taken to retrain the employees 100,000. Guys, retraining of employees, can we take it as a discontinued operation or a closure cost? No, that's for the continuing part, no guys, so we can't take that. Redundancy? Yes, because that we are paying for the people who are leaving. Right, 75,000 we are spending on marketing to tell people that we are moving to a new location. Is it related to the closure? No, that is for people to come for the new business. So therefore, guys, only 300,000 should be the correct answer for this question. Done. Okay, right. Now, guys, last one. On 30th of June 2003, before the financial statements were authorized for issue, a plant was sold at a loss and the redundancies were settled more than expected. They are asking whether these are adjusting or non-adjusting event. Guys, can you tell me, closing the division down, when did we decide? Right, look at the paragraph, guys. We decided on when? 1st of January 2003 itself, we decided that we are going to close it down. That means, was the evidence already there for this event before the reporting date? Yes or no? Right, now normally, guys, how do we know whether something is adjusting event? You have to see whether this particular event was there before the reporting date. Now the reporting date, I believe, is in March. We decided to close the division in January. So was the evidence already there before the reporting date? Yes or no? Yes. Therefore, guys, both will become adjusting events because already we know something like this is happening. So therefore, guys, it becomes an adjusting event 275. Right. So, guys, with that one, I believe the first 5 questions are discussed. Okay. Right. Let's go for the next 5 guys over there. The other homework question what I had given. Sure. No problem. Yeah. Right. See. Now this question is finishing off on 31st of March 2003. Right. We authorized it on June. Alright. So between this and this, 2 things happen. One plant we sold at a loss for 100,000. Redundancies we had to pay extra. Now this redundancy story, did we already know before March? Yes. You know why? We planned to close the division when? Before the year end, exactly. That means we plan to close it on 1st of January, no? So that time itself, we knew this redundancy is there. It's already there in the statement because, we plan to pay 300,000, but we had to pay 350. But before March, you already knew this happening, no? That means evidence is there for this event. That's why it becomes a adjusting event. Selling the plant, now this plant also you're selling for the division that is closing. You already knew the division is going to close, no? Then when they happen after March, no problem because you already knew. Therefore, it's an adjusting event. But let's say we decided to close the division after March. Then was the evidence there before the reporting period? No. Then these will become non-adjusting events. So you have to always see whether this particular event you got to know before March or you got to know before the reporting period. Then adjusting event. If not, non-adjusting. Okay, guys, let's go for this question over here. This is the other homework question, guys, what I gave related to lease. Okay. Right, 286. Which of the following applies to faithful representation? It has to be, guys, answer option number C. Right, though a lease asset is not our own asset, we are in control, no? So we show it as our asset. Right, substance over form. So that's where, guys, faithful representation will kick in. Okay. So therefore that answer is C. Right, next question what they're asking. How much would be charged to Fino's statement of profit and loss for the year ended 30th of September 2007 if telephones are applied to the exemption permitted by IFRS 16? Okay, let's look at this question, guys, over here. Right. On 1st of October 2006, okay, Fino entered into an agreement for telephones to be leased. Guys, quick recap. Telephones are considered as low value asset, right? If it's a low value asset, now normally there are 4 low value assets: computers, right, tablets, telephones, and small pieces of furniture. These are what we call as low value asset. For low value asset, we don't have to do the normal lease. Normal lease means what? Understanding the liability, right of use, lease table, none of that is needed. The only thing what you should do is you have to see what's the expense you're incurring and put that to profit and loss account. So in this question, telephone is low value asset. Now, so what's the treatment? See, we are buying 20 telephones at a cost of 240 per telephone. So now, guys, what you should do, you have to multiply. Okay, so what's going to happen, guys, over there? Right, 20 telephones we are buying, one telephone is 240. Okay, per annum. Guys, you're buying this for how many months, guys, over here? Let's check and see quickly. For how many months are we buying? Right, that's per annum, no? So we are buying for 24 months. 24 months means, guys, how many years? 2 years. Right, check and see, guys, what's the total cost that we have to bear that case? How much, guys, we have to bear in that case? 9,600. Guys, this is the total payment we have to bear. Okay, for the telephone, total payment 9,600. But guys, look at the question. They are asking how much should be charged as at 30th of September 2007. Guys, look at this. My question is starting in October 2006. Requirement is for September. After how many years? After 1 year. So therefore, guys, divide by 2. Why we are dividing by 2? There is a 24-year lease. For 2 years, 9,600. That means 1 year, guys, what should be the answer? 4,800. Correct. It has to be option A. Option A should be the answer. So again, guys, listen. If it's a short life, what is short life? Less than 12 months. Or low value. What are low values? Telephone, small pieces of furniture, tablets, and computers. For these, this is the accounting treatment that you should use. What is the treatment? First, see the total payment. I have to pay 9,600. Divide by the number of years. That answer, we charge it to profit and loss account, right? So 4,800 will go as lease rental. That's it. Yeah, small computers. Correct. That's it. Okay, are we guys all okay with this one? Shall I move to the next question then? Okay, next question. What are they asking? What is the carrying amount of right of use? Okay, guys, normally how do we find carrying amount? Right of use minus depreciation. Okay, guys, normally how do you find right of use in accounting? We add 4 things. What are the 4 things? Initial lease liability, down payment, other direct cost. Other direct cost means what? Documentation charges, installation, transportation, and dismantling cost. Okay, right, now let's go to the paragraph. On 1st of April, guys, note, first, it's not October, 1st of April. Right, Fino entered into an agreement to pay advance annual payment of 100,000. Right? Which one, Amjad? Finance cost means which one? I don't know. Finance cost doesn't come. Finance cost doesn't come under this one. Other direct cost. Okay. Right. Anyway, guys, coming back to this one. Annual payment of 100,000. Guys, annual payment of 100,000 is the installment. Installment does not come for ROU. Right. Would be scrapped. The present value of the lease payment is 350. Guys, present value is what we call this one, initial lease liability. So let me guys mark this one here, initial lease liability 350,000. Guys, now in our paper, no down payment, no other direct cost, no dismantling cost. So the entire thing will become again right of use. First copy this one guys over here, right of use 350,000. That's the right of use. Okay guys, now depreciation. Now take this answer and calculate depreciation. Guys, how to calculate depreciation? Let's go to the question. Right, what's a useful life? 4 years. But be careful, you have to be careful. When are you taking the lease? April. When is the question going until? Question is going until when guys? 30th of September. So count and see guys. Very good. Yeah, April to September, how many months are there? 6 months. No, so only 6 months you all have to calculate depreciation. So guys, 350,000, that's the right of use, divided by 4, that into 6 divided by 12. That's your answer. $350,000 into 4, that into 6 divided by 12. So guys, the answer is 43,750. That is your depreciation. Now take this depreciation and guys deduct it from this. Okay, deduct it from this part. Minus 43,750. Now guys, can you get your carrying value? 306,250. Done. That's your answer. Okay. Right, next one guys, what is the interest that would be charged to profit and loss? Okay guys, listen, I'm not going to go back to the question. This is the lease advance table. Now normally in lease advance table, how do we calculate interest? Like this, brought forward minus installment. This is what we call net amount. For this answer only we have to see the percentage. What is brought forward? Initial lease liability. The initial lease liability is 350,000 minus installment. Guys, how much is the installment in your question? 100,000. Very good. So what will be the net amount? 250. The paper says there is a 10% cost of capital. From where did I get the 10%? Down they have mentioned that. Okay. 10. Cost of capital is 10. Okay. But guys, you have to be careful. This is how many months lease this time? Right now, interest you are getting for 1 year. No, is it a 1 year lease? No. How many months? 6 months. Very good. So this answer you have to check into 6/12. Correct, Rifki. Let's check into 6/12. Right now, guys, can you check and see your answer on this one, guys, faster? So the answer will be 12,500. This has to be the answer. Okay, 12,500. Okay, are we guys all okay with that? Okay, guys, now last question at 290. Applying the principles of IFRS 16, what is the impact it will have to the following ratios? Okay, guys, now ROCE. Guys, normally how do we calculate ROCE? operating profit divided by equity plus debt, capital employed, equity plus debt. Guys, now think, when I take a lease, does my operating profit get affected? No, because the lease means interest. No, interest comes after operating profit, so it doesn't affect. Does my equity get affected? No. Debt? Yes, because lease is a liability now. So guys, what will happen? Debt will go up. When debt goes up, the ratio will come down. This will decrease. Guys, gearing. Right, gearing is, guys, something like this. Now gearing, what's the equation? Debt over equity. Okay, so when I take a lease, what will happen? My debt capital will go up. When debt capital goes up, ratio also will go up. Then there will be an increase. Okay, there will be an increase. Right, last part, guys, interest coverage. Normally, guys, what's the equation for interest coverage? It's like this: operating profit divided by interest. Guys, when you take a lease, operating profit remains the same. But when there is a lease, there will be more interest, no? Then interest will go up. Now denominator increasing. Very good. Then what will happen to the ratio? Ratio will reduce. This should be, guys, your answer for the 10 homework questions what I give. Always remember, guys, when denominator is increasing, ratio will reduce. Okay, guys, now the time is 4:35. Right? I'll give you all guys a short today 20-minute break. Those 3 hour class, no? I'll give you a 20-minute break, guys, to pray and come back, and then we'll continue with more questions. And also, guys, I know that I have a ratio question that I have to discuss. I will do that one also. Okay, right? Can you guys have a small break and come back then? 20 minutes. Okay, 20 minutes. we can start this question over here. Can you now, guys? We'll focus a little bit on financial instruments. Okay, we'll focus a little bit on financial instruments. Right, I'll give you guys around 10 to 15 minutes time. Can you guys little bit work on this part over here? 296 to 300. Okay, 296 to 300, right? So those who don't have the question, I will guys share the question in the WhatsApp group. Okay. Okay. Can you guys start on this question, please? $296 to 3. I think that this is a relatively new question. Okay, so it covers EPS, financial instruments, lease, and tax. Right, these are things, guys, that is being covered over there. So guys, can take 10 minutes time and try these questions over here quickly. Yeah, so Basil, this is the question that we should do. 296 to 300. I give students 10 minutes to try the question on their own, and then I'll be explaining. Okay. Okay, right. So guys, I gave you all 10 minutes. Normally 15 minutes you can take. Let me guys now start explaining the question. Okay. What is the finance cost to be charged relating to loans? Okay. Guys, now normally when it comes to loans, okay, uh, it's a financial liability, this part. Normally, guys, what's the accounting treatment? It starts with an A. What's the accounting treatment name we call it, guys? Amortized cost. Exactly. So normally, guys, amortized cost, how does the table work? Brought forward plus interest minus cash is equal to carried down. Okay, so brought forward, let's see. They have issued 20 million loan. Issue cost is 600,000. Guys, remember the brought forward should always be proceeds minus issue cost. Okay, proceeds means what you're getting. How much did you get? 20 million rupees we got, minus issue cost. So the issue cost is 600,000. The brought forward has to be 19,400 rupees. Right. Guys, interest, we have to always charge what? The promised one or the effective one? What should we guys charge always? The promised one or the effective one? Effective one. We have to always charge the effective one. Okay. Promised one should be the cash. Okay, when it comes to the cash calculation only, we go with the promised rate. The interest what we charge here will always be what rate? The effective rate. So the effective rate is how much, guys? 10%. 1940. So 1940 means, guys, answer will be option D. Option D should become the correct answer. Okay, are we guys all okay with that part? Option D should become the correct answer. Okay. Right. Now, guys, let's go for the next one then. Right. So option D, no, April to March. Yeah, that's 1 year. So therefore, that should be the answer. Yeah. So Rifki, the first answer what you sent is correct. Right. Next one, guys, they are asking what is the carrying amount of right of use? This question now we have done already. No, guys. So normally, guys, what is carrying value? Carrying value is equal to ROU minus depreciation. Right. What's the ROU in this question? Yes, listen, for ROU, what is the first thing that we need? Initial lease liability. What is the initial lease liability over here? 5.7 million. That's the lease liability. To this, we have to add what? Down payment. This is the down payment, the initial payment what we are making, 3.3 million. Then what we have to check in the paper? Other direct cost. It's not there. I believe it's not there. And dismantling cost, that is also not there. So therefore, guys, now add these two. When you add these two, what will be the answer, guys? 12 million. Very good. Depreciation, guys, what's the depreciation divided by how many years? Have they given anything like that? No. So therefore, I think it has to be divided by 5 years. Have they given the useful life, guys, by any chance? Useful life is given. No, 6. Okay, useful life is given. So useful life is 6 and lease period is 5. What should we guys take? 6 or 5? 5. Because, guys, remember, I have taught you in questions, if it's silent, you have to always go for the lower out of those two. So therefore, we have to divide by 5. So 12 million, guys, when you divide by 5, what will be the answer then? 5.7 plus 3.3. Is it 9 there? I did it. I think I'm making a mistake there. Yeah, no, 9 million. Sorry. 9 million then divided by 5. What's the answer, guys? 1,800. 1,800. Have we taken the lease at the start? Yes. So therefore, guys, the answer will be 7.2 million. That should be the answer. Okay, right. Guys, next part they're asking from you, 298. What is non-current liability? Guys, normally to find non-current liability, what should we do? The lease table. The table has to be prepared. So, guys, check and see. Brought forward. Is it an advance payment or arrears payment? It's an arrears, no, where we are paying at the end. Yes. So the table will be, guys, like this. Brought forward plus interest minus cash is equal to carried down. What is brought forward? Initial lease liability, which is 5.7 million. right? What is the interest, guys, they are charging? 10%. So 10% interest when you charge, the answer is 570. Minus cash, guys, what is the meaning of cash? Installment. In this question, what is the installment? 1.5 million per month. No, that's the installment. Okay, then guys, what will be the carried down, guys, for the first year? 4,770. Take this to this side. Again, charge another one-time interest. Minus again the same installment. Then, guys, what will be the answer in that case? 3,747. Circle this. This only will become your non-current liability. Therefore, guys, answer has to be option B. Okay. It's a very straightforward question. Just you have to do the least table and find your answer. That's it. All good. So guys, if I'm being a little bit fast, if you're not getting the answers or you didn't get hold of something when I was explaining, you tell, I will go through, but I'll continue the question otherwise. What is the income tax expense? Right now they are asking income tax. Guys, listen, if it's income tax expense, you have to look for three things. What are the three things? First is TB tax, under provision, over provision. Then you have to add current year estimate. Okay, and then after that one, guys, what should we do? Deferred tax movement. Okay, these are the three things that we want. Okay, TB tax. Yes, when I go to my trial balance, deferred tax is there, but that's not what I want. I want current tax. Is current tax available? No. So therefore the TB tax, guys, will become 0. Let me mark it here. Done. Now current year estimate. Read the paragraph and see what's the current year estimate. A provision for current year is required at 3.5 million. Mark it over here. 3.5 million. Done. Now, guys, what do we need? DT movement. What is DT? Deferred tax. To find the deferred tax, guys, I'll tell you one small thing. Please open a small T account. Then only we can find deferred tax movement. Open a T account. Right? To find deferred tax, guys, open a T account and keep. Okay. Now, how to start this T account? Step number 1 is brought forward. From where can you get the brought forward? Previous page, trial balance. Let's go to the trial balance. How much is the deferred tax brought forward? 2,700. First copy that one, guys, in your T account. Okay, 2,700. Done. Next one, carried down. Guys, remember, carried down, they might give. Let's read the paragraph and see, have they given the carried down? They are telling the tax value of the asset is less than the carrying amount and the income tax rate is 25%. Let's listen carefully. In the exam, for the carried down, there are two ways. Like in MIMS question, either they will give the answer, carried down is this much. Or you know what they will ask you to do? They will ask you to do something like this. Something like this means what? They will ask you to take TD. What is TD? Temporary differences. What is temporary difference? The difference between tax base and carrying value. Now in that paragraph you saw now, guys, they are telling the difference between the tax base and the carrying value is how much? 12 million. Take the 12 million and multiply with the percentage. What's the percentage, guys? 25%. Now check and see what will be that answer. 3,000. No, so 3,000 is the answer. Okay, guys, now close the account. When you close the account, 300 answer is coming on this side. When the answer comes on credit side, we call it as a deferred tax increase, right? It's an increase. If it's an increase, you should add to your formula. If it's a decrease, you have to subtract from the formula. So Rifki, answer is correct. Last answer, guys, should be 3.8 million. This is your answer. right? So this is how, guys, I always do tax. I write the equation and I do a T account. That's it. I don't do anything more than this. Okay, I always stick to this method. All good, guys? Right. Guys, now last part. For SOFP, you should take this and this. Okay. This has to go as current liability. That's it. This has to go as what? Non-current liability. That's all. That's all goes to SOFP. Okay. This one current liability, this one non-current liability. Right. Okay. Guys, now last part. For PL, this one. The last answer of the equation. Okay. They are asking what is the comparative earnings per share to be shown in the statement of financial position. Guys, now look at this. What's happening over here? They have given you last year EPS and they are asking you to restate. Now, normally, how do we restate? Now, first of all, guys, what is this restate earnings per share? Guys, listen, in a question, in the current year, if we go for bonus issue or rights issue, last year EPS has to be adjusted. Now, in this question, you saw now, guys, over here, they are going for a bonus issue. That's why they are asking you to now restate your comparative. How to restate comparative in accounting? Like this. Take the last year EPS. Exactly, very good. Multiply with the reciprocal of the bonus fraction. What is reciprocal? Upside down. First take the last year EPS. What is the last year EPS? 45 cents. First copy this here. Done. 45 cents. Right. Now you have to multiply this one with the reciprocal of the bonus fraction. So first of all, guys, we have to identify what's the bonus fraction. How to do that part, I'll teach you. Go to the previous page. Right, go to the previous page. Okay. Right. Guys, now look at this one, guys, carefully. Don't make a mistake. Look at this one, will you? Now see, they are going for 1 for 4 bonus issue. No, don't confuse. I have taught you this in part 2 paper. Guys, $35,001. That means how many shares they are having? 35,000 shares. Good. But can you tell me this 35,000 shares, is it before the bonus or after the bonus? Check carefully and tell me. The 35,000 shares, is it before the bonus or after the bonus, guys? Right? Check this and tell me, is it before the bonus or after the bonus? It is after the bonus. You know how guys we know after the bonus? Listen. The equity share, if it's before, they will give the date, opening balance. MIMS Corporation question, they said equity share on first, then opening balance. Opening balance means before the bonus issue. Here equity share, are they giving any date? No, this is at the end of the year. End of the year means that this is after the bonus issue. Guys, understand, if it's after the bonus issue, to find before the bonus issue, you should multiply by not 1 over 4. You should multiply by 1 over 5. 1 extra. You know, guys, why we are going 1 extra? Here, look at this carefully. I'll tell you why we are going 1 extra. Listen. Brought forward of shares. Okay. I don't know because they haven't given me. Then there is a bonus. That also I don't know how much. But what I know is carried down of shares are how much? 35,000. The organization went for what ratio? They went for 1 for 4. That means if someone has 4 shares, they will give 1 free. That means what's the total number of shares then? 5. 35,000 is represented by 5. 35,000 divided by 5 and multiply by 1. Then you will understand how many bonus share. So when you do this fraction, guys, what's the bonus share? 7,000. That means, guys, before the bonus, what's the number of shares? 28,000. Right, now listen. What is bonus fraction? Bonus fraction means new shares divided by old share. New shares are 35,000. Old shares are 28,000. So as a simple fraction, this will be how much, guys? 5 over 4. No, yeah, as a simple fraction, guys, this will be 5 over 4. But remember, they are asking not bonus fraction, no, they want reciprocal. Reciprocal means, guys, what we are going to do, we are now going to mark this and show it as how much? 4 over 5. This is how we get the bonus fraction answer. Right, first of all, guys, students who want to copy this down, wait. Right, copy this down, guys, or take a screenshot of it, how I got the answer as 1 over 5 in the first place. Okay, and this 5 over 4 is the bonus fraction. Okay, right. So remember, guys, even in part 2 paper like this it can come. Okay, so get familiar with it. Get familiar with the equity share dates, okay, when they give you. Sorry, part 2 means section C questions, big questions also they can ask this. Okay, now guys, once we're done copying this one, guys, can you copy the answer also, guys, faster for the last one? Yeah, that's the answer, guys. 1 minute, it has to be less. 45 into 4 divided by 5. Always remember, after restating, it should be less than last year. Okay, because we are taking the opposite. Yeah, exactly. 36 should be the answer. Correct answer. Yes, I'm yet to answer your question. Yes. Okay, guys, let's do one more set of 5 questions, and then let's conclude the class. One more set of 5 questions once we're done with this. So guys, remember, I believe yesterday I did 4 set of 5, gave you 2 for homework, and today we are completing another 2. So far, guys, we have done, I think, if I'm not wrong, 40 questions we have done on section B. Okay, right, but don't worry, we will be doing more. Okay, until you sit for the exam, I'll be working with you. Next week also we are having classes. When is the exam, guys? Is it a Wednesday or a Thursday? Thursday. So until the exam we will be working. Okay, right, guys, can you start this question, guys, for me over here? So this is going to be on financial instruments. Okay, okay, let's start this question, guys, over here. A very good question, because it covers all aspects of financial instruments, right? Let's do this question, guys, over here. Howard, I will send the requirements to the group. Okay, we'll see. As much as possible, we'll try to revise. Okay, so guys, those who don't have this one, I'm now sending the question to the group. Okay, start this one, guys. 10-15 minutes last set. Right, Amjad, commercial substance in the sense, from the cash flow there has, sorry, from the contract, there has to be risk and reward. Okay, in simple words, there has to be some kind of a cash flow associated with it. That's what we call commercial substance, right? There has to be some sort of cash. Yes. Now, when you take construction contract or selling goods or providing a service, there is always cash involved. No? We are supposed to get something. No, that's what we call commercial substance. Okay. Guys, that consolidated ratio question I'll discuss on Sunday. And Sunday, guys, we'll be doing another one, consolidated ratio as well. Okay. So guys, this one covers financial liabilities and equity instruments. Okay, both are covered over here. And also guys, today also I'll give you all 2 questions for homework, 2 set. Okay. So far, all three of your answers are correct. Yeah? Shall I discuss the question, guys? I gave you all 10 minutes only, but I'll discuss. Let's see. Okay, first one. What is the first question? Which of the following will be classified as financial instruments? The answer has to be, guys, all. Now, in financial instrument lesson, guys, we talk about four things. What are the four things? Financial liability, loan, convertible instruments, shares or assets, investments in equity, shares, assets, investments in debt, giving loans for another company. All of these we are discussing. So therefore, guys, everything will be financial instrument. Then, guys, let me go for the next part. Okay. What would be the value of the liability on 30th of September? So, guys, I believe 30th of September has to be at the end of the year. Right. Now, guys, look at this. Okay. Now, guys, they are telling the liability on first is 28,508. It's a convertible loan, but the director has done step 1 and step 2 properly. Step 1 and step 2 means what? Step 1 is what? Understand the liability. Step 2, find the equity. Both has been done properly. So this is the liability, but that's on first. They are asking us to find on when? At end of the year. So normally guys, liability, what is the accounting treatment that we always go for? Amortize cost. Exactly. So let's start guys. Brought forward plus interest minus cash is equal to carried down. So guys, first let's start with what you can say brought forward. So what will be the brought forward guys over there? Brought forward is how much? 28,508. The answer what they gave. Interest guys, I should take always interest. What one? Promised or effective? Effective. The effective interest is 8%. What will be the 8% interest on this answer guys? Quickly, 28,508 into 8%. So guys, come here, decimal number, no? Shall we round it off? Yeah, 2281. Yeah, correct. Guys, I made a small mistake. The effective rate is 10. Sorry, effective rate is 10. Yes, 10. Yeah. The other one, promised one, only 8. Correct. So 28,508 into 10%. Guys, shall we round it off? 2851. All okay with that one, guys? 2851. Minus cash. Guys, what is cash? Cash means actual interest paid, right? Promised. Now forget everything. Stick to the question. What's the amount of the loan without the conversion? What is the original value of the loan, guys? 30,000. Correct. For 30,000, we agreed 8%. When it comes to cash, guys, it's always simple calculation. Take the original value of the loan and see the percentage. Okay, so therefore, guys, what will be the answer? 2,400. Okay, now, guys, can you check and see the carried down, please? Guys, remember, financial instruments, start revising our core area of syllabus. Okay, right. What will be the answer, guys, in that case? So according to a student who gave me the answer previously, it's 28,000. Yeah, 959. 28,959. Yeah, 28,959. This should be the answer, guys, for that question. Nah? This has to be the answer. Okay. Right, guys, then let's go for the next question. Okay, let's go for the next question, guys. What we have. Okay, what is the finance cost that should be done for the other loan? Okay, guys, listen. Finance cost means interest, no? Loan. Again, what? Amortized cost. Right, now they're asking for this loan. Okay, let's start one more time. Brought forward plus interest. That's enough. No need to go far, because they're only asking interest, no? So therefore, guys, we don't have to go far. Okay, guys, brought forward is 9,600. How did I get the answer as 9,600? Guys, look at this. Brought forward is always what? Proceeds minus issue cost. Proceeds is 10 million. Issue cost is 400,000. So therefore, guys, what will be the answer? 9,600. Percentage, we should always put, guys, what rate? Effective. So the effective is 8%. What will be the 8% answer, guys, for 9,600? 768. This should be the answer for that question. 768. Okay, next one, guys, what they're asking, next question. What is the income to be recorded regarding the equity instrument? Okay, let's check and see, guys, regarding the equity instrument. Now, first of all, right, the equity investments is 1 million. Okay, Kapoor has paid a dividend of 0.1. So, guys, when you get a dividend, is dividend an income? Yes, dividend received. So therefore, what's the dividend income you have received? 100,000. No, 100,000 dividends we have received. Correct, no, guys? Yeah. And then the fair value of the share was 7. Okay. So the fair value is 7. 1 minute. Before that, how much is the fair value? Before that, the fair value is 6. Okay. Right. So guys, then what happened? At the end of the year, your 1 million shares are at 7 rupees, meaning 7 million. Guys, quick recap. What is this? Financial asset. Investments in equity. For investments in equity, when the question is silent, Okay, we call it as what? Default position. What is default position? If there is a issue cost, take it as an expense. Then check your cost, 6,000. Check the market value at the end. Any difference, you should take it where? Income, other income or investment income. So guys, from 6,000 it became 7,000, means 1,000 I am having 1,000 I'm having a gain. So guys, 1,000 gain on financial asset, 100,000 income, dividend income. So therefore guys, the total answer will be 1,100 for this question. They are asking what is the income now, so we should take dividend income plus the gain in the financial asset. Both has to be taken. All okay, right? Then guys, last question. Howard is uncertain how to treat professional fees. Guys, what is professional fees? Issue cost. Right. For which of the following assets it should be capitalized? Fair value through OCI. Yes, you have to capitalize. Okay guys, remember whenever they say OCI, you have to capitalize issue cost. Fair value through P&L. No, if it's through P&L, we always take it as what guys? We always take it as expenses. Amortized cost. Yes, we have to capitalize. Now, if you're confused, amortized cost, how are we capitalizing? Guys, remember, issue cost is always debited to the loan. Debited to the loan means you're reducing from the cost of the loan. Okay. So, therefore, we call it as capitalized. That's why. We are debiting to the loan now, issue cost. That's why. In OCI, what we do, we debit to the investment. We debit to the investment. Okay, right. Guys, can you little bit mark this set for homework and keep, guys? Okay. The next question. That also financial instruments. Try this for homework, 311 to 315. Okay, financial instruments. Just try for homework. Okay. Then guys, on the other hand, can you also guys try this one for homework little bit? 321 to 325. These are on what? Foreign currency and tax. Okay, foreign currency and tax. Right? That's enough guys for homework. Next class, when I do accounting standards, I will do a recap on revenue standards and all of those. So I think after that, we are, I think, almost done. Yeah, and then if time permits, let's do in section B cash flow questions. Okay, I think that would be ideal. Right, so guys, Sunday, yesterday I started a ratio question. No, Sunday when I start the class, I will explain that, and we'll do another one, consolidated ratio. So that will take approximately around 10:30. After the break, let's discuss accounting standards again. Okay. Okay. Right. Okay. So guys, and with that, then I'll be concluding today's class. Again, guys, next class is when? Sunday at 8:30. Yeah, Sunday at 8:30.